Daryl Willie Insurance. What's up, everyone? As you can see, Chicago Bears. Tomorrow is the draft. We got the number one pick. Hopefully, they do not mess this up. All right? We need a quarterback. We need a difference maker. All right? I am here with my turmeric tea and to get you informed on what's going on. This is something that I wanted to bring. Shout out to Don Jegler, who wrote this article. We're going to get through it real quick, but hopefully it brings you some value as it relates to auto insurance. All right. Vehicle complexity, labor reshaping auto industry, and collision repair. Now, remember that collision repair. New technologies and rising labor costs are putting pressure on auto insurance carriers as auto repairs by making repairs more costly and increasing their repair times. Trends that a new report asserts are reshaping the industries. Now, when you look at commercial, okay, let's talk about semi trucks. Did you guys know there are people out there, mechanics right now, making $230 an hour working on semi trucks? $230 an hour working on semi trucks. Now, I know your car is not a semi, but I am just letting you know mechanics are trying to get paid. The technology is different. The materials of cars are different. Everything is different about how cars are today. So if you are looking for your grandparents' prices, this is not the video for you, okay? It's not, all right? Things cost money now, real money. So bottom line message, newer vehicles being produced may be safer from crashes. That's a good thing. And better at helping drivers avoid crashes. But the advanced technology is contributing to costlier repairs, higher claim costs, and longer cycle times. According to CCC Intelligent Solutions, a cloud operation serving the property casualty insurance industry. Guys, I had a windshield replaced, had a little crack, but it was like too big of a crack. You know, you just got to get it replaced. You know, you have something and I got to get this fixed, right? It's bugging me, right? Because when you look in your window, you have that technology in your window with like driver assist and, you know, it'll help brake when something's in front of your car. All that stuff has to be replaced and remounted and reset on new windshields. Everything is different about cars now, okay? CCC's latest report, Q1 2024, is based on information from 300 million claims-related transactions as well as bodily injury and personal injury protection / medical payments casualty from CCC's customers. These emerging trends have contributed to the 60% increase in the amount of time it takes vehicles to enter repair shops after estimate completion compared with before the pandemic, the report shows. So, since the pandemic or plandemic, depending on who you are, it's taking longer now. Things are costing more. Supply chain has been weird, and also getting parts is a hassle. All right. These emerging trends have contributed to, again, the 60% increase in the amount of time it takes for vehicles to enter repair shops after estimate completion compared with before the pandemic. Kevin Shumate, Vice President, Managing Director of Vehicle Services with Crawford & Co., said the report reflects the ongoing changes in auto repair and auto claims that appear to be causing major changes in the industry. Okay? I completely agree with pretty much everything that CCC said in the report, Shumate said. Robert Passmore, Department Vice President for Policy Research and International for the American Property Casualty Insurance Association, said the CCC report validates the increasing claim costs that insurers are seeing every day. Guys, understand, the more claims go in, the higher it costs to fix it. Guess what? Because insurance is a pool of money from all of us, they're going to raise our premiums. That's just a fact. They have to have enough money in that pool to cover down on all of these claims and higher prices, right? So where do they get the money from? Us, the consumer. If you're part of that pot of insurance, you're a part of that group, guess what? Your premiums got to go up to help cover this. The insurance is not going to write the check for us. You get what I'm saying? So this is like super important. Got to drive safe because people don't understand what you do. You might think you're an individual, don't bother nobody, it's just you, you're a lone wolf, whatever. You live in a community of people, and all of us share the community. And when someone does something, there is a ripple effect that affects the rest of us. So don't think that what you do does not affect others, because it can. Don't think, oh, it was just a fender bender, it's no big deal. It affects all of us, right? So we got to be conscientious. Look at that. Conscientious. Okay. Auto insurance premiums have been on the rise for the simple reason that the cost of what goes into auto insurance has been rising. This is what I'm saying. Auto insurance claims and expenses spiked more than $1.12 for every $1 in premium in 2022. Give you that again. Auto insurance claims and expenses spiked to more than $1.12 for every $1 of premium in 2022, Passport said. The report fingers new technologies as one of the biggest cost drivers and drivers of greater repair time. So it's not just how long it takes and how much to repair. The new technologies in these cars and the new materials that they're using are just more expensive to fix. And sometimes you can be in a crash. It's just better probably to total the car. Because the damage that these cars sustain now, because they're not built like these steel, big old giant Cadillacs, you hit them and bounce off and keep on moving. These cars are folding up. Mama, sorry, I got my little shih tzu with me. These cars are folding up. So, the report fingers new technologies as one of the biggest cost drivers and drivers of greater repair times, such as higher costs of repairing vehicles with advanced driver-assisted systems. Today's average passenger vehicles are highly instrumented, the report says. Many newer standard vehicles have 1,400 plus semiconductor chips. That number can be nearly doubled in electric vehicles, roughly 30,000 parts. Think about that, people. Got to give it to you again. Many newer standard vehicles have 1,400 plus semiconductor chips. That number can be doubled for electric vehicles and roughly 30,000 parts to make up a car. Electronic components like collision warning, talked about that up in the windshield, right? Driver assist safety technologies, advanced driver assistance systems accounted for 40% of new vehicles' total costs. That's 40%, okay? According to the report. I know some of y'all think about, you know what? After I listen to this video, I'm going to go log into Craigslist and get me an old school ride. Don't do that. Don't do that. It's going to be okay. You just need someone to help you get your numbers right, right? You need like an insurance broker who can shop around, get you the best situation, and keep you on the road that fits your budget. So don't jump on Craigslist, getting that, 1991 Mazda yet. Chill out, all right? Just hold on a second. Now, the number of vehicles with safety features like automatic emergency braking, for example, continues to grow. In 2017, automatic emergency braking equipped vehicles coming from U.S. automakers accounted for about a quarter of total production. That grew to 60% by 2019 and was 95% by 2023. What are you saying, Willie? Well, I'm glad you asked. I am saying year by year by year, these cars are getting better technology, but more expensive. Okay? So nothing's free. Also, if you think this is the free channel and everything is free, this channel is not for you. We have to pay to play. America is a money game. You got to pay to play. All right. So we're not going to look for things to be free. We're just going to get our money right and find ways to get our money right. Right. So we're not going to look for things to be free because it costs. And as you can see, these automakers are spending the money so you and your family can have a better, safer ride on the road. But we got to pay for that. Right. So electric vehicles are becoming more common in repair assessments as the number of EVs on the road grows. EV repairs cost more and come with longer repair times due to capacity. Okay. Now, EVs are also totaled less often. Hear that? EVs are also totaled less often, reflecting changing valuation trends, according to the report. There are fewer than 50,000 new EVs sold in 2013 last year, and more than 1.2 million EVs were sold. EV sales now represent 1.9% of repairable appraisals, while the average repair difference between EVs and non-EVs is roughly 50%, according to the report. Data from the International Energy Agency shows a total of 14% of all new cars sold globally were electric in 2022, up from around 9% in 2021. IEA's latest outlook anticipates 14 million EV sales by the end of 2023. Now, we all know that there's a big pushback in America for EVs, but there is not a pushback globally on EVs. All right. So when you hear people say, oh, I don't like EVs and I have an EV and I have a regular car, gas car. And I'm telling you, I love the EV. It doesn't go in the shop. The gas car, I got things I got to deal with. Okay. So I'm not saying which one is better or not. They both serve their purpose in however way your lifestyle is set up. But what I am saying is do not believe when you hear on the news, oh, people don't want EVs. People may not want EVs here, but EVs are selling globally. The prevalence of EVs is compounded by the increased labor costs. Labor hours per claim are higher for newer models, more and more of which are EVs, a difference that has grown by nearly 40% over the last 10 years. Labor now accounts for 45.5% of total repair costs in EVs 3 years or newer versus 35.9% for comparable non-EVs. Okay, a number of reports have come out this year to show upticks in claims for EVs. The frequency of claims submitted for repairable electric vehicles rose to its highest level in 2023, ending the year at 1.97% in the US and 2.86% in Canada. A report out in March from technology and information provider Mitchell International Inc. shows. Collision repair labor in general has been increasing the past 2 years, and it may continue going up. Believe that. Mechanics want their money. Demand for new collision technicians is expected to reach 20,000 per year through 2027. That's 75% of which are to replace existing positions. Compounding the labor shortage are a growing number of vehicles in operation, an increase of 150 million compared with a drop of 55,000 in the number of service bays, according to CCC report. I am telling you guys, I'm in Chicago, Midwest. I do travel a lot, but I am telling you, it's hard to find a mechanic. It is hard. First of all, it's hard to find one that you feel good about. You know, if you like me, you want your mechanic to be like, you know, somebody you feel really good about. It is hard to find a mechanic. When you go to some shops, they will tell you they don't have enough mechanics. They can't get people in here. And I don't know how America is going to fix this problem, but this contributes to how much it costs to get you back on the road and how fast they can get you back on the road. A big trend, not in the report, but which is on Shoemaker's radar, is the supplement percentage in the claims and repair process. Okay? In the past, one supplement on a vehicle was common, but with vehicles becoming more complex, as noted in the CCC report, these supplemental discoveries after repairs are being undertaken appear to be on the way up. I've seen 2, 3, 4 supplements on some of these really complex cars, Shumet said. On some of these more complex vehicles, you can't write the original estimate and see everything and know everything that's going on, because you have to, with these cars, they're so complex now. It's not like you're eyeballing it. It's like, oh yeah, that's going to cost whatever that's going to cost. Once you get into it and you have to really dig into the car, and when you repair it, one thing leads to another thing, leads to another thing, leads to another thing, and tick, 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 your repair costs are going up. Right? So additionally, a part supplement can come into play when a part is not immediately available, forcing repair shops to either find a different part or ship a part from overseas. That's time. I think that definitely adds to the cycle time, but it's also impacts severity as well. Medical expenses are another of several price driving factors called out in the CCC report. So, in an accident, got to pay that medical, right? Severity continues to climb due to significant costs increases for medical bills, particularly for high dollar procedures like radiology and surgery, despite decreasing treatment duration and procedure counts for injury claims since the peak in 2021. The average amount paid out on third-party bodily injury claims has been steadily increasing to the current 25,000 figure. I'm glad they said that, because I'm telling you guys, when you go and try to get auto insurance, don't just say, oh, just give me the basic. Don't get the basic, because if you can't cover it, they're coming to see you. You need to carry extra. I know it sucks, but trust me, paying the premium will always be cheaper than the judgment. Remember I said that. Paying an insurance premium, is no matter how much you dislike insurance, how much you think it's a game and a scam, will always beat that potential court judgment of you not having enough. So carry more, right? I always say it, 2 is 1, 1 is none. 2 is 1, 1 is none, right? So increases have slowed in the last year, but the cumulative increase over the last 4 years have resulted in a 35% increase since second quarter 2019. That means medical costs and accidents are going up. So imagine you have medical costs you have to pay out. Not only your insurance, you don't have to pay out. Not only that, you have the property damage of that. That's money, money, money going the wrong way. Inflation is clearly a factor behind many of the cost increases noted, APCIA's Passmore. Cumulative years of record high inflation have greatly increased the cost of repairing and replacing cars, Passmore said. The increasing sophistication of the technology in today's vehicles is also contributing to rising costs. Vehicles with advanced technology like cameras and sensors require more parts to be replaced, higher labor costs, and additional operations for scanning and collaboration of systems. This means that repair costs have risen to their largest year-over-year increase. These more complex and expensive repairs are also taking longer, and that show up as higher rental costs. Lastly, recent reports have shown that drivers are engaging in riskier behavior behind the wheel, such as speeding, distracted driving, and impaired driving, which increase injury and collision claims, costs, and compounds the effect of inflation. I'm going to read it again because it's important. Lastly, recent reports have shown that drivers are engaging in riskier behavior behind the wheel, such as speeding, distracted driving, and impaired driving, which increases injury and collision claim costs. That's compounded with inflation. That's stuff you can control. Distracted driving and speeding, you can control. So before we fully blame the price of insurance skyrocketing, going crazy, and the price of everything, let's think about what we can control and how we're contributing to how much we have to pay. And I said in another vehicle, these cars now and these personal injury lawyers, they are smart. They can get these computers and the cars are telling on you. They're jamming on brakes, speeding, doing too fast. And you telling the police officer, no, I didn't do anything. I was just minding my business, had my hands on the 9 and 3 like I was taught in school. And then the computer tell the lawyer, no, he wasn't. He was going 80 and a 55. Switching lanes. These cars are smart and they're telling on you guys. I'm trying to give you this public service announcement, okay? So we got to take care of that. We have to take care of what we can take care of, and then let these insurance brokers get it right with the money. But you got to help by doing your part. All indicators suggest elevated auto repair and replacement costs will stretch well into 2024 and potentially beyond, he added. Insurers are urging drivers to reduce their risk by avoiding driving behaviors like distracted driving, speeding, and impaired driving that may result in crashes. Ladies and gentlemen, there you have it. Appreciate you spending time with me. I truly hope it brought value to you, because I got something out of this report. Remember, be safe out there, take care of yourself, and pay those insurance premiums. Do not drop insurance. Do not. Talk to your insurance provider. Reach out. Do not drop your insurance. All right? And try not to get the minimum. Get a little bit extra just for the cushion. All right. Talk to you guys later. Have a good one.